Welcome to the BizNews Briefing. I'm currently reporting live from Hermanus at the BizNews conference. Today is Thursday the 12th of March and I'm Kerry Lanigan. On tonight's show, Dawie Roodt on why SA's state wage bill is choking growth, a market update led by Standard Bank, Donald MacKay on how car subsidies hit local buyers, and oil supply risks rise as the Iran crisis worsens. Addressing delegates at BNCH yesterday, economist Dawie Roodt unpacked how South Africa's bloated state payroll is distorting fiscal choices and holding back the country's economic growth.
The other reason why the Minister of Finance does not want to reduce the inflation targets is because of the civil servants. Now, he doesn't say this in the budget speech. You have to dig into the numbers to get to the actual number. Civil servants, before I get to the civil servants, the social expenditure, there are 27.5 million people out of a population of about 65 million people that get a grant from the state. The biggest grant is about 2,400 Rand for the old age grant, and the various grants goes down to about 500-600 Rand for the child support grant, for example. 27.5 million of them getting a grant from the state. The increase, we're talking about people that are destitute. If you don't give them this grant, they are literally going to die of hunger in many instances. So the increase in the grants were 3.8%. And remember, inflation target is 3%. So the increase in grants is 3.8% for most of these various grants, 27.5 million people. The civil servants will get an increase over the next 3 years of 4.4%. Now, let me give you some numbers. And the reason why is because SATO is part of the tripartite alliance, and of course, they want these civil servants to be much better remunerated. I've done some calculations. The average civil servant is paid more than 50,000 Rand per month. The civil servants, there are 1.2 million. I exclude the state-owned enterprises and local authorities. The average civil servant of 50,000 Rand per month, there are 1.2 million civil servants. The salary of the civil servants is a third of total state expenditure, and as a percentage of GDP, those civil servants get, note, I do not use the word earn, I use the word get. There's a difference between those two. They get approximately 13% of the economy. So 13% of the total economy used to pay only on a national account, civil servants on a national account. That is not all. The GDP numbers were released last year for 2025. The economy expanded at a rate of 1.1% last year. That means that the last time we were here in terms of per capita GDP is 20 years ago. We've lost 20 years. Weak economic growth below the population growth. The Minister of Finance expects economic growth of 1.6% going forward. I'll get back to that just now. But something here that I am very concerned about. The real state capture in South Africa are the civil servants and the tenderpreneurs, where they are totally and completely overpaid.
In today's market update, Standard Bank delivers a strong full-year result. Montauk Renewables reports weaker profitability, and Southern Palladium remains in development mode as it funds the next phase of its Bengwenyama project.
Standard Bank delivered another strong full-year performance. Headline earnings rose 11% to 49.2 billion Rand. Headline earnings per share increased 12% to 3,025.7 cents, and the total dividend for the year was lifted 12% to 1,695 cents a share. Return on equity improved to 19.3%, right at the top end of the group's target range, with management pointing to solid balance sheet growth, stronger fees and trading revenue, and lower credit impairments. Then to Montauk Renewables, the US-based renewable gas producer with a secondary JSE listing. Revenue was broadly flat at $176.4 million, but profitability came under pressure, with EBITDA down 21.2% and headline earnings falling 60.4% to $4.4 million. Headline earnings per share dropped to 3 US cents, and the group opted not to declare a final dividend as it keeps cash focused on expanding its operations portfolio. And in resources, Southern Palladium remains very much a project development story rather than a producing miner at this stage. The Australia-listed, JSE secondary-listed company said interest income rose 24.8% to just under 669,000 Australian dollars, but its operating loss widened to 5 million Australian dollars as it continued advancing the Bengwenyama PGM project in South Africa. The company also highlighted a 20 million Australian dollar capital raise completed during the period as it pushes ahead with its definitive feasibility study and regulatory approvals.
Trade expert Donald MacKay explains why South Africans are often paying more for cars than buyers overseas. He says local subsidies favor exports, and ordinary motorists end up footing the bill through higher showroom prices at home. MacKay sat down with BizNews editor Alec Hogg for a Q&A session at BNC8 yesterday.
I want us to make cars here, but we've got to be clear-eyed about this. Producing cars here is extremely expensive, and there is no way we will ever produce cars in South Africa if the subsidy disappears. 43 billion rand last year. Our cars are expensive, so the consumer funds that
How?
premium.
Explain that.
Well, sure. So the subsidy works in the following way. The more cars I produce, I earn up a set of certificates called production rebate credit certificates. There are varieties in there. Don't worry about those too much. And the more I produce, but you earn on a curve. So the more you produce, you're not getting one for one. And it's designed to create a surplus of these certificates. I'm Mercedes-Benz. I've produced all of these cars. And so the first thing I can do is I can use these certificates to import other models of my car without paying the tariff. There's a 25% tariff on cars. 18% if you bring it out of Europe. So Mercedes-Benz, Toyota, all of them, we can import their cars, they don't pay the tariff. Then what happens is I still have surplus. And so what I do is I sell that surplus to Kia. And so SARS collects nothing. Kia will pay about 90% of that tariff to Mercedes-Benz in my example. And so now what is happening is a private company is effectively collecting the tax. It's not theoretically a tax anymore, but it's an effective tax. The effect of that is it keeps the price of the cars high because everyone is paying the tariff apart from the local manufacturers. But because the tariff is there, they've got no reason to drop their price. We did a benchmark study a couple of years ago, and what I did was the C-Class Merc is made in South Africa, sold in the US, but it's also, of course, sold here. And so I looked at the price of the C200 at a dealership online in Boksburg. And we don't sell the C200 to the US, we only sell the C300. And so I went to Manhattan thinking one of the most expensive real estates in America. And that C-Class Merc a couple of years ago was 300,000 Rand cheaper in Manhattan than here.
No, just repeat that.
300,000 Rand cheaper in Manhattan than here. But in those days, the tariff on cars into the US was zero it's changed now.
So we pay 300,000 Rand more for that vehicle in particular, because we live in South Africa,
Yes.
than someone buying it in the richest or the most expensive real estate in the world, in Manhattan.
Yes.
That's absurd.
Yes.
And that's because we as the taxpayers, we as the buyers of cars, are subsidizing the export to the US.
Yeah, that's essentially it.
Oman's key oil export terminal was evacuated and 2 crude tankers were hit in Iraqi waters as risks to global energy supply from the Middle East war deepened. Bloomberg's Jumana Berchechi reports from Dubai.
We're keeping an eye on oil prices after Oman cleared all vessels from its key export oil terminal and 2 tankers were attacked in Iraqi waters. The war jitters are overshadowing a record release from the IEA and President Trump's earlier comments that the U.S. has won the war against Iran.
Well, it's only good if you win. You can only do. And we've won. Let me tell you, we've won. You never like to say too early you won. We won. We won the bet. In the first hour, it was over.
Let's bring in Horizon's Middle East and Africa anchor, Jumana Berchechi. Jumana, bring us up to speed with developments that are driving the oil supply concerns.
Yeah, well, Hazinda, there's a lot going on overnight, and viewers will probably notice that I'm not reporting from the office today, and that is because out of an abundance of caution, many financial institutions have been advised to stay away from the IFC, which is the main financial hub in Dubai. And to be clear, there hasn't been a formal evacuation order that's come through from the IFC, but out of an abundance of caution, financial institutions, including Goldman Sachs, Standard Chartered, Citi, have all advised employees to work from home if they're available to work from home. And similar, of course, for us, Bloomberg, we are situated in DIFC. Just over the last 12 hours here in the UAE, we've received 3 missile alerts. There was a high-rise building in Dubai that was also struck or got hit by an intercepted drone. And yesterday, we were talking also about a drone that was intercepted near Dubai airport, causing a suspended operations for a limited amount of time. 4 people were injured. But then, of course, this is just the UAE. More broadly speaking, we continue to wake up to news of more interceptions over oil fields in Saudi Arabia, more hits at diplomatic quarters in Iraq, Kuwait, and an ongoing barrage of attacks that are also taking place in Israel, which has really amplified in the last 24 hours or so. And in return, the joint U.S. and Israeli operations in Iran continue to escalate. Also on the Lebanon front as well, the latest news suggesting that more than 600 people have died in Lebanon and 700,000 displaced.
That's been tonight's BizNews Briefing. I'm Carrie Lanigan, and we'll see you again on Monday.